To our deep dive into the Square of Nine technique, focusing on how to square the current price with time elapsed since a prior change in trend. This method, rooted in the legendary work of W.D. Gann, helps traders and analysts identify critical turning points in the market by aligning price and time. In this video, we'll break down the process step by step, using real market examples to illustrate how you can apply this powerful tool in your own trading analysis. Whether you're new to Gann techniques or looking to refine your skills, this guide will provide practical insights and actionable strategies. Before we get into the calculations, let's clarify what it means to square price with time. In Gann analysis, squaring refers to finding a harmonic relationship between the price level and the time elapsed since a significant market event, such as a trend change. This relationship is often expressed in degrees, using tools like the Square of Nine calculator or conversion tables. By identifying these harmonics, traders can anticipate potential reversal points or continuation signals, giving them an edge in timing their trades. To apply the squaring technique, you need four essential pieces of information: the closing price, the high or low price of the day, the number of trading days since the prior change in trend, and the number of calendar days since that event. These data points form the foundation for your analysis. For daily charts, the closing price is typically used, but if results are inconclusive, checking the high or low can provide additional clarity. This approach ensures that you capture the most relevant price action for your calculations. Let's look at a real-world example using the DJX cash index. On March 12, 2003, the DJX made a significant low after a prior downtrend began on January 13, 2003. The key data for this analysis were closing price at 75.52, low price at 74.17, 38 trading days and 58 calendar days since the trend change. This setup provided an ideal opportunity to check for a price-time square, especially since the market had just formed a bullish reversal bar known as a hammer in candlestick terms. Compare price and time. We first convert the number of trading and calendar days into degrees. Using a static degrees conversion table or an online Square of Nine calculator, 38 trading days equate to 165 degrees, while 58 calendar days correspond to 66 degrees. This conversion is crucial because it allows us to directly compare these time values with the price degrees, establishing whether a harmonic relationship exists. Next, we convert the closing price and the low price into degrees using the Square of Nine method. For the DJX, the closing price of 75.52 translates to several degree values: 259, 349, 79, and 169 degrees. These represent the base degree and its 90-degree offsets. Similarly, the low price of 74.17 converts to 245, 335, 65, and 155 degrees. These calculations set the stage for comparing price and time harmonics. Now let's check if the price and time values align. The closing price degree 169 is within 4 degrees of the trading day degree 165 at a 90-degree offset, indicating a near-perfect square. Similarly, the low price degree 65 is just 1 degree away from the calendar day degree 66, also at a 90-degree offset. These close alignments suggest a strong harmonic relationship, signaling a potential reversal or continuation in the market. In this example, we did not convert the DJX prices to 3 digits before performing the calculations. This is because we were working with fixed prices, not price ranges. It's important to recognize when such conversions are necessary, as using the wrong method can lead to inaccurate results. For base prices, stick with the natural price values for your degree calculations. Let's move to another example, this time with the NYSE High Beta Index NHB. On October 10, 2002, the NHB made a significant low, with the prior swing ending on August 22, 2002. The data points here were 34 trading days, 49 calendar days, and a low price of 1,248.55. This index is not directly tradable, but it provides valuable insights due to its leading nature among high beta stocks. For the NHB example, we convert 34 trading days to 105 degrees and 49 calendar days to 315 degrees. These conversions, again, use the static degrees table or an online calculator. This step is essential for aligning the time component with the price, ensuring that any harmonic relationship is accurately identified. Low price of 1,248.55 for the NHB translates to degree values of 15.26, 105.26, 195.26, and 285.26. These represent the base degree and its 90-degree increments. By comparing these values with the time degrees, we can check for a square and determine if a significant market event is likely. Comparing the NHB's price and time degrees, we see that the 105.26 degree value for the low price matches exactly with the 105 degree value from the trading days. This precise alignment is a textbook example of squaring price with time, reinforcing the significance of the October 10, 2002 low as a potential turning point. Squaring price with time is more than just a mathematical exercise. It provides traders with a structured way to anticipate market movements, identify potential reversal points, and manage risk. By understanding the harmonic relationships between price and time, you can make more informed trading decisions and improve your overall market timing. Sometimes, the closing price alone doesn't provide a clear squaring result. In these cases, it's valuable to check the high or low of the bar, especially if the prior change in trend was a significant high or low. This approach increases the chances of identifying a harmonic relationship, even if it doesn't occur at the close. When analyzing daily charts, always determine both the number of trading days and calendar days since the prior change in trend. This dual approach ensures that you capture both market-specific and broader time harmonics, providing a more comprehensive view of potential turning points. It's possible for a squaring to occur somewhere within the bar, not just at the high, low, or close. By calculating degrees for both the high and low, you increase your chances of spotting a harmonic relationship that might otherwise be missed if you only focus on the closing price. Remember, when working with fixed prices such as a specific closing or low price, you do not need to convert to 3 digits. This is only necessary when analyzing price ranges. Using the correct method ensures your calculations remain accurate and relevant to the market context. At first, the squaring process may seem complex, but with practice, it becomes intuitive. As you work with different tickers and market conditions, you'll develop a feel for the nuances and learn how to adapt the technique for consistent, reliable results. The key is to stay methodical and patient as you build your expertise. Several tools can assist in the squaring process, including static degree conversion tables and online Square of Nine calculators. These resources simplify the math and help you quickly identify degree relationships, making the analysis more efficient and less prone to error. The Square of Nine is a legendary tool in technical analysis, developed by W.D. Gann. It is based on geometric and numerical relationships, allowing traders to forecast market movements by aligning price and time. Its enduring popularity is a testament to its effectiveness in various market conditions. Candlestick patterns, such as the hammer seen in the DJX example, often coincide with squaring events. These patterns provide visual confirmation of potential reversals, strengthening the case for a significant market move when combined with price-time harmonics. Squaring often highlights key reversal points, whether bullish or bearish. By aligning price and time, you can spot moments when the market is likely to change direction, allowing you to position your trades accordingly and manage risk more effectively. The squaring technique is not limited to a single market or asset class. Whether you're analyzing stocks, indices, or commodities, the principles remain the same. This versatility makes it a valuable addition to any trader's toolkit, regardless of their preferred market. The NHB example also highlights the value of combining squaring with Elliott wave analysis. High beta indices often lead the market, and their wave counts can provide additional context for squaring results. Integrating multiple technical tools enhances your market perspective. One common mistake is misapplying the 3-digit conversion. Always check whether you're working with a fixed price or a price range before converting. Using the wrong method can skew your results and lead to missed opportunities or false signals. The more you practice squaring price with time, the more intuitive the process becomes. Start with historical examples, then apply the technique to live markets. Over time, you'll develop a keen sense for when and where to look for harmonic relationships. There are many resources available to deepen your understanding of the Square of Nine, including articles, calculators, and community discussions. Leveraging these tools can help you refine your technique and stay updated with the latest insights in technical analysis. Visual aids, such as charts and diagrams, make it easier to grasp the relationships between price and time. Reviewing annotated charts like those shown in our examples helps reinforce the concepts and provides practical reference points for your own analysis. Understanding the historical context of the Square of Nine and its use in markets like Wall Street in the 1950s can provide valuable perspective. The technique has stood the test of time, proving its relevance across decades and market cycles. The Square of Nine is closely related to square root theory, another of Gann's innovations. By understanding how square roots relate to price levels and time cycles, you can further enhance your technical analysis toolkit and uncover deeper market patterns. Today, traders have access to advanced charting platforms and automated calculators that make applying the Square of Nine faster and more accurate. Integrating these modern tools with classic techniques allows for more efficient and effective analysis. While this video focuses on daily bars, the squaring technique can be adapted to other timeframes such as weekly or intraday charts. The principles remain the same, but the data points and degree conversions will vary based on the timeframe you choose. For best results, combine the Square of Nine with other technical indicators such as moving averages, RSI, or MACD. This multifaceted approach increases your confidence in trade signals and helps filter out false positives. Squaring price with time can also play a role in risk management. By identifying likely reversal points, you can set more effective stop losses and position sizes, protecting your capital while maximizing potential gains. Let's briefly review the two case studies, DJX and NHB. Both examples demonstrated how closely price and time can align using the Square of Nine, providing clear signals for potential market turns. These real-world cases highlight the practical value of the technique. Every market and ticker has its own nuances. As you gain experience, you'll learn to recognize patterns and adapt the squaring technique to different scenarios. Continuous learning and adaptation are key to long-term success in technical analysis. Engaging with the trading community can provide valuable insights and alternative perspectives on the Square of Nine. Sharing experiences and discussing different approaches helps refine your technique and keeps you updated with evolving best practices. The Square of Nine is just one of many price-time analysis tools. Explore related methods such as Fibonacci retracements, Gann fans, and time cycles to broaden your analytical toolkit and discover new ways to interpret market data. It's important to approach squaring with an objective mindset. Avoid confirmation bias by testing your calculations across multiple examples and timeframes. Objective analysis leads to more reliable trading decisions and better long-term results. Technical analysis is an evolving discipline. Stay open to new ideas, tools, and techniques that can enhance your understanding of price and time relationships. Continuous improvement is the hallmark of successful traders and analysts. Recap: the key steps in squaring price with time are: gather your data, convert time and price to degrees, compare for harmonic relationships, and interpret the results in the context of market structure. Following this process ensures a systematic and effective analysis. Here are some practical tips. Always double-check your calculations, use visual aids to confirm your findings, and don't rely solely on one technique. Combining squaring with other methods increases your confidence and accuracy in market analysis. To deepen your knowledge, explore related articles, books, and online calculators. The more you study, the more proficient you'll become at identifying and leveraging price-time harmonics in your trading. Squaring price with time is a powerful technique that can transform your approach to technical analysis. By mastering this method, you'll gain a deeper understanding of market dynamics and improve your ability to anticipate key turning points. Remember, practice and continuous learning are essential to success. Thank you for joining us on this journey through the Square of Nine and the art of squaring price with time. We hope this guide has provided valuable insights and practical tools for your trading journey. Stay curious, keep learning, and may your analysis always be sharp and effective.